Ladies and gentlemen, the clock is ticking. 7 days. That's all the time we have left before one of the most dramatic wealth migrations in American history reaches a point of no return. Right now, as you watch this video, billionaires are quietly packing up their empires and disappearing from California at a rate we've never seen before. But this isn't just about rich people moving to bigger houses or nicer weather. What's happening right now is sending shockwaves through the global economy, and the consequences are going to affect every single one of us, whether you live in California or halfway across the world. In the next few minutes, I'm going to reveal the real reasons why some of the most powerful people on the planet are abandoning the state that made them billions, and why experts are warning that we might be witnessing the beginning of the end for California's reign as the world's innovation capital. Imagine waking up one morning to find that the person who invented the technology you're using right now has decided your state isn't worth their time anymore. That's exactly what happened when Elon Musk, the richest person on Earth, announced he was leaving California for Texas. But here's what the media didn't tell you. Musk wasn't the first, and he definitely won't be the last. Behind the scenes, a mass exodus has been unfolding for years, and it's accelerating at a pace that's making economists genuinely nervous about what comes next. Let me paint you a picture of what's really going on. California has long been the promised land for entrepreneurs, innovators, and dreamers who wanted to build the next big thing. Silicon Valley became synonymous with success, wealth, and technological advancement. For decades, if you wanted to make it in tech, you moved to California. It was that simple. The state became home to more billionaires than most countries have millionaires. But something fundamental has shifted, and that shift is about to reshape the entire American economic landscape in ways most people haven't even begun to understand. The first domino fell years ago, but nobody was paying attention. Larry Ellison, the founder of Oracle and one of the wealthiest individuals in tech, moved his company's headquarters from Silicon Valley to Austin, Texas. Then came Hewlett-Packard Enterprise, shifting operations to Houston. Charles Schwab relocated from San Francisco to the Dallas area. And then the big one, Elon Musk moved both himself and his company's operations to Texas, taking Tesla's headquarters and much of SpaceX's expansion plans with him. Each departure sent a clear message, but California's leadership seemed determined to ignore what was becoming impossible to deny. So what's driving these titans of industry away from the state that built them? The answer is more complex and more alarming than simple tax rates, though those play a massive role. California's top marginal income tax rate sits at a staggering 13.3%, the highest in the nation. When you combine that with federal taxes, successful entrepreneurs and business owners in California can find themselves paying over half their income in taxes. Think about that for a moment. You build a company from nothing, you take all the risks, you sacrifice everything, and then more than half of what you earn goes to the government. For billionaires dealing with hundreds of millions or even billions in annual income, we're talking about tax bills that could fund entire government programs in smaller states. But here's where it gets really interesting. When Elon Musk moved to Texas, experts estimated he saved over $1 billion in state income taxes on a single stock option exercise. $1 billion. That's not just money sitting in a bank account. That's capital that can be reinvested into new ventures, new technologies, and new jobs. Except now, all of that is happening outside of California. Larry Ellison's move to Hawaii, which has no state income tax on capital gains for certain investments, allowed him to structure his wealth in ways that would have cost him hundreds of millions if he'd stayed in California. These aren't just personal financial decisions. These are strategic business moves that have cascading effects throughout the entire economy. The tax situation alone would be troublesome enough, but it's actually just the tip of the iceberg. California has developed a regulatory environment so complex and restrictive that even the most well-funded companies find themselves drowning in red tape. Environmental regulations, labor laws, building codes, zoning restrictions, and countless other requirements create a web of compliance costs that smaller companies can barely afford and larger companies increasingly don't want to deal with. Starting a business in California now requires navigating through more regulatory hurdles than starting a business in most developed nations. The state that once prided itself on innovation and disruption has become the state that regulates and restricts innovation at every turn. Consider what it takes to build a manufacturing facility in California versus Texas. In California, you're looking at years of environmental impact studies, community approval processes, union negotiations, and building permit reviews that can stretch on indefinitely. In Texas, you can break ground in months. When Tesla wanted to build its Gigafactory, Elon Musk chose Nevada specifically because California's regulatory environment would have delayed the project for years and added hundreds of millions in additional costs. Now, with the new Gigafactory in Texas and the Starbase facility near Brownsville, Musk has essentially written California out of his future expansion plans entirely. The real estate situation in California has reached levels that can only be described as economically irrational. The median home price in San Francisco recently crossed $1.5 million. In Palo Alto, the heart of Silicon Valley, the median price exceeds $3 million. Even a modest apartment in a decent neighborhood can cost more than a mansion in states like Texas or Florida. For companies trying to recruit talent, this creates an impossible situation. They have to pay employees substantially more just to afford basic housing, which means higher operating costs, which means less money for growth and innovation. For the billionaires themselves, many own multiple properties worth tens or hundreds of millions of dollars. The opportunity cost of keeping that capital tied up in California real estate becomes harder to justify when they can own comparable or better properties elsewhere for a fraction of the cost. But the story gets deeper when you start to understand the psychological and strategic factors at play. Many of these billionaires didn't just wake up one day and decide to leave. They stayed in California for years, even decades, watching the state's policies become increasingly hostile to business and wealth creation. They paid the high taxes, dealt with the regulations, and absorbed the costs because California offered something unique: access to the world's best talent pool, proximity to other innovative companies, and an ecosystem that fostered creativity and risk-taking. However, something changed in recent years that made even these benefits not worth the cost. The shift became particularly pronounced during the pandemic, when remote work proved that geography matters less than it once did. If your engineers can work from anywhere, why force them to live in one of the most expensive places on Earth? If you can run board meetings over video calls, why maintain expensive office space in San Francisco? The pandemic didn't create the exodus, but it accelerated a trend that was already well underway. It forced business leaders to question assumptions they'd held for decades about where companies needed to be located to succeed. There's also a cultural element that often gets overlooked. Many of the billionaires leaving California built their fortunes on principles of innovation, efficiency, and meritocracy. They increasingly feel that California's political and cultural environment has become antithetical to those values. They see a state government that views wealthy individuals and successful companies not as engines of prosperity, but as targets for taxation and regulation. They watch as policies get passed that seem designed to punish success rather than celebrate it. This creates a psychological breaking point where even those with deep roots in California decide that enough is enough. The impact on California's economy cannot be overstated. When a billionaire leaves, it's not just one person's tax revenue that disappears. It's their employees, their investments, their charitable contributions, and the entire economic ecosystem that surrounds their activities. When Oracle moved its headquarters to Texas, it didn't just mean Larry Ellison's personal taxes went elsewhere. It meant thousands of high-paying jobs moved out of state. It meant millions in corporate taxes shifted to Texas. It meant the restaurants, shops, and service businesses that relied on Oracle's presence lost a major customer. The ripple effects touch every corner of the local economy. California's state budget has become increasingly dependent on tax revenue from its wealthiest residents. The top 1% of earners in California pay nearly half of all state income taxes. This creates a dangerous situation where the loss of even a handful of ultra-wealthy individuals can blow a massive hole in the state budget. When Elon Musk left, some estimates suggested California lost hundreds of millions in annual tax revenue from just that one individual. Multiply that across dozens of departing billionaires and hundreds of millionaires, and you start to see why California is facing budget deficits, despite having the highest tax rates in the nation. The tech industry, which has been California's crown jewel for half a century, is experiencing a fundamental transformation. New tech hubs are emerging in Austin, Miami, Nashville, and other cities that offer better business climates and lower costs of living. Austin has become particularly attractive, with companies like Tesla, Oracle, and Palantir establishing major operations there. The city now rivals Silicon Valley in terms of venture capital investment and startup activity. Miami has positioned itself as a crypto and fintech hub, attracting entrepreneurs who want to build the future of finance somewhere that welcomes innovation rather than trying to regulate it out of existence. Florida presents an especially interesting case study. With no state income tax, favorable business regulations, and increasingly strong tech infrastructure, the state has become a magnet for wealthy individuals and growing companies. Keith Rabois, a prominent venture capitalist and early PayPal executive, moved from Silicon Valley to Miami and has been vocal about the advantages. He's not just relocating himself, but actively recruiting other entrepreneurs and investors to join him. This isn't just about individual moves anymore. We're seeing the formation of entirely new entrepreneurial ecosystems that could rival California's traditional dominance. The job market implications extend far beyond tech. When billionaires and their companies leave, they take with them not just engineering jobs, but also positions in marketing, sales, operations, and countless other fields. They take contracts that would have gone to local vendors, consultants, and service providers. Real estate markets that were supported by these high-income individuals start to soften. Local governments that budgeted based on tax revenue from these sources find themselves scrambling to close budget gaps. The entire economic structure that was built on California, being the unquestioned center of wealth and innovation, begins to crack. Perhaps most concerning for California's long-term prospects is the brain drain that accompanies the wealth drain. Young, ambitious entrepreneurs now look at California and see a state where success is punished and where the costs of building a company are unnecessarily high. They're starting their ventures in Austin or Miami instead, places where their capital stretches further and where the regulatory environment doesn't strangle innovation. This means the next generation of breakthrough companies might not have any connection to California at all. The state risks losing not just current billionaires, but future ones as well. The transformation of California's role in the global economy is already underway, and it's happening faster than most experts predicted. For a century, California was synonymous with the American dream, the place where anyone with an idea and determination could build something extraordinary. That narrative is being rewritten in real time. The state is transitioning from a creator of wealth to a consumer of wealth, relying on the assets built in previous generations while struggling to generate new sources of prosperity. This isn't sustainable, and everyone knows it, but the political will to make necessary changes seems absent. There's a tragic irony in California's situation. The state has natural advantages that should make it impossible to fail. Perfect weather, stunning geography, world-class universities, and deep cultural roots in innovation and creativity. These are assets that states like Texas or Florida can never fully replicate. Yet California has managed to take these incredible advantages and squander them through policy choices that drive away the very people and companies that made the state prosperous. It's a cautionary tale about how even the most blessed regions can decline when leadership loses sight of what actually creates opportunity and growth. The 7-day time frame I mentioned at the beginning isn't arbitrary. We're approaching fiscal deadlines, corporate relocations, and personal moves that will lock in the trajectory for years to come. Once companies establish new headquarters, once families settle into new communities, once investment capital flows to new regions, reversing these trends becomes exponentially more difficult. California still has time to change course, but that window is closing rapidly. The state needs fundamental tax reform, regulatory relief, and a renewed commitment to the principles that made it great in the first place. Without these changes, the exodus will continue and likely accelerate. Looking at the broader picture, what's happening in California represents a crucial test for American federalism. States are supposed to compete for residents and businesses by offering better policies and opportunities. This competition drives innovation in governance and allows people to vote with their feet when policies fail. California's situation demonstrates what happens when a state becomes complacent, assuming its natural advantages make it immune to competition. The billionaires leaving California are sending a clear signal. No amount of sunshine and scenic beauty compensates for policies that are hostile to success and prosperity. The psychological impact on those who remain shouldn't be underestimated either. When the most successful, most accomplished individuals in your state are choosing to leave, it sends a demoralizing message. It tells entrepreneurs that maybe California isn't the best place to build something anymore. It tells young professionals that perhaps they should start their careers elsewhere. It creates a negative feedback loop where departures breed more departures, and the state's competitive position deteriorates further. Breaking this cycle requires not just policy changes, but a fundamental shift in how California's leadership views the relationship between government and prosperity. The question we need to ask ourselves is whether California's experience represents a unique situation or a warning sign for other high-tax, high-regulation states. New York, New Jersey, and Illinois are watching California's billionaire exodus with growing concern because they face similar challenges. If the pattern holds, we could see a broader reorganization of American economic geography, with wealth and opportunity increasingly concentrated in states that welcome rather than punish success. This would represent one of the most significant shifts in American economic history, with implications that extend far beyond state borders. So where does this leave us? California stands at a crossroads. The state can continue on its current path, watching more billionaires disappear, more companies relocate, and more opportunities slip away to competitors. Or it can recognize that the economic model of the past decade isn't working and make the difficult changes necessary to remain competitive. The data shows clearly that the current approach is failing. Budget deficits grow even as tax rates hit record highs. The cost of living spirals upward while quality of life measures decline. The state that once represented possibility and promise increasingly represents dysfunction and decline. The billionaires leaving California aren't doing so out of spite or greed. They're responding rationally to incentives and costs. They're making decisions that maximize their ability to create value, generate returns, and build lasting enterprises. California has made those activities increasingly difficult and expensive, so capital and talent flow elsewhere. This isn't a moral judgment on California's values or priorities. It's simply an observation about cause and effect in a competitive economic environment. States that make it expensive and difficult to create wealth will lose wealth creators to states that welcome them. The 7 days I mentioned represents more than just a countdown. It represents the narrow window remaining for California to demonstrate that it understands the urgency of the situation. Every day that passes without meaningful reform is another day that billionaires, millionaires, and ambitious entrepreneurs conclude that their futures lie elsewhere. Every announcement of another headquarters relocation or another wealthy individual changing residency reinforces the narrative that California's best days are behind it. Changing that narrative requires action, not just rhetoric about the state's enduring appeal. This moment will be remembered as either the wake-up call that saved California or the point of no return that marked the beginning of its long decline. The choice belongs to California's leaders and voters. They can recognize that prosperity requires policies that encourage rather than discourage success. They can acknowledge that infinite taxation and regulation eventually drive away even the most committed residents. Or they can continue believing that California's natural advantages make it immune to the basic economic forces that govern competition between states. History suggests which choice leads to renewal and which leads to decline. What we're witnessing isn't just a story about California, it's a story about how quickly fortunes can change when policies diverge from economic reality. It's a reminder that no state, no matter how blessed with advantages, can take prosperity for granted. It's evidence that people in capital are mobile and will flow to wherever they're treated best. Most importantly, it's a demonstration that the decisions we make about taxation, regulation, and the business environment have real consequences that ripple through every level of society. The billionaires vanishing from California are leaving behind a state at a crossroads and a question that demands an answer. Will California choose to compete for the wealth creators and job creators who built its prosperity, or will it continue down a path that drives them away? 7 days isn't much time, but it's enough time to decide whether this trend is a temporary setback or the beginning of a permanent decline. The clock is ticking, and the whole world is watching to see which choice California makes. Now I want to hear from you because this affects all of us regardless of where we live. Do you think California can reverse this trend and bring back the billionaires and businesses that are leaving? Or is this the beginning of a permanent shift in American economic power? Are these billionaires justified in leaving, or do they have a responsibility to stay and help fix the problems? What would you do if you were in charge of California's economic policy? Drop your thoughts in the comments below because I read every single one and your perspectives help shape future content. If you found this analysis valuable and want to stay ahead of the major economic shifts that are reshaping our world, make sure to subscribe and hit that notification bell so you never miss an update. Share this video with anyone who needs to understand what's really happening behind the headlines. The decisions being made right now will determine the economic landscape for the next generation, and understanding these trends gives you the knowledge to position yourself accordingly. Thanks for watching, and I'll see you in the next video where we dive even deeper into the economic forces shaping our future.